Hey, what's up, everybody? It is Wednesday, December 9th. Here's the rundown. We had a little bit of a pullback in the market today. A couple of things I want to get into. Look, the fiscal flows are still very strong, so I don't anticipate that this pullback is going to be very sizable. In fact, today might have been it. I think you got to buy this dip. It's probably going back up again. One thing very interesting is yesterday I mentioned the put-call ratio. I went back through 14 years of data because I look at the 10-day average and the 20-day average of the put-call ratio. And in that 14 years of data, I did not find a reading as low as it is right now. As somebody said to me, somebody posted up a comment here saying, hey Mike, I went and I looked on my Bloomberg terminal and there was a reading that was lower in 2000, in the year 2000, right at the peak of the dot-com bubble. So, take that for what it's worth. The reading then was 0.42. Right now, the 10-day average is 0.686. So yeah, he said he saw it on his computer, on the Bloomberg terminal. He went back and he looked, and in the year 2000, that was like the top of the dot-com bubble, and then he said, we all know how that worked out. But it's a little bit different now. I mean, in 2000, those were the years, that was the year of the Clinton budget surpluses. So the surpluses were sucking out income and private savings. We have the reverse situation right now. We have, really unprecedented fiscal support. I talk about that every single day. So these are massive government transfers to the economy, money transfers, demand transfers, etc. And so it's a little bit of a different situation. But, look, I've been saying the sentiment is very bullish. We're probably going to have a correction. I just don't see the scope for a sizable correction as long as the fiscal is the way it is. Now, if you have some change in policy, which may very well happen under, the Biden administration, that's a different story, but we'll know about that. Here's another thing I want to mention. Today's EIA weekly petroleum status report. I mean, there's only one word to describe it, and that word is ugly, man. It was ugly. I mean, an enormous build in crude inventories, 15.2 million barrel build in crude inventories. That was the biggest increase in 8 months. It puts crude inventories now up to the highest level in 8 months. Gasoline inventories were up, distillate inventories were up. Gasoline demand way down, okay? Distillate demand down. So demand is weakening. The only thing we saw an increase in refiner inputs. I doubt that's going to last. I mean, the refiner inputs, that's crude demand on the part of refiners, that went up. Jet fuel demand went up a little bit. What else? Huge drop in crude exports. The biggest 1 week decline ever. 1.622, I believe 1.622 million barrels down in a week. Man, that's a lot. And a big jump in crude imports. So we're importing, the imports went up. We have rising inventories. It's just like the whole thing was an ugly, bearish combination. I think, I still think it's probably temporary because, I keep coming back to this fiscal support. Right now I could understand these oil numbers just because the economy went on lockdown again in a lot of places. So you're going to see a demand collapse, right? You're going to see inventories build back up. We got no way to burn off those inventories if people are locked down again. So I have to think that this is a temporary situation. But look, producers are short oil. I think we get a pullback. I don't think it's going to be like a crash or anything. but I think we get a pullback. Oh, it was an ugly report. If you want the whole breakdown, I mean, I sent out an email to my subscribers today with all the numbers, as I always do on Wednesdays. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Bank of Canada, they held the rate steady. That was anticipated. But the Canadian dollar, and I sent this out on the petroleum report. It was bearish oil. I said sell the Canadian dollar for my forex traders, and that went down. Not a lot, but it went down. Tomorrow we get the ECB. They're expected to announce a new round of quantitative easing. So they'll probably hit the euro. The dollar was up a little bit today. Let it go up a little bit higher. You know what we do? We sell the dollar rallies. That's right, we sell the dollar rallies. And that about sums it up, folks. But it was an ugly EIA report, I can tell you that. Go to my website, pitbulleconomics.com, sign up for a 30-day free trial, and I will send you the email and the breakdown, the special report that I put out on Wednesdays for the oil markets. Have a nice evening. See you tomorrow. Bye-bye.